All right, good morning, ladies and gentlemen. This is Clueless Day Trading Frank on a rainy morning here out here on the New York, New Jersey waterfront area. It's approximately 11:03 a.m. on Sunday. I'm sorry, Saturday. Skipping a day here. It's 11:03 a.m. In the afternoon, early afternoon on Saturday, August 4th, 2018. This is a free complimentary what we call ACS advanced coaching session, or more like an introductory session for all new members. During this webinar, we'll probably have a few other people coming in. This session will be recorded, as we always do with our free webinars, and uploaded to the Clueless Day Trading YouTube channel, which is where all our video casts are uploaded and available for free viewing by members and for anyone else out there who'd like to take advantage of some of the fantastic stuff that we do here at Clueless Day Trading. I do not write video blogs. I don't write long-winded blogs and things like that. I like to show things on a visual basis, and that's why all these video casts have a home, and that's Clueless Day Trading YouTube channel. Secondly, as all of you are new members, want to point out, full disclosure, this is purely for financial education and not for any solicitation or advice. Let me start off with what Clueless Day Trading is, and I'll try to keep this short. Himanshu is very new, so I'm assuming that you probably you were either referred by somebody else, or you probably saw some of my few charts on StockTwits or on Twitter. How did you land up here, Himanshu?
Yes, I saw this on your Twitter feed, so I've got you on my Twitter feed.
You have me. Oh, okay. You mean the public Twitter feed, the Clueless 8 FR?
Yeah.
Oh, okay, got it. My marketing guy, who's also a trader, he's the one who runs all the social media platforms, which we have been enhancing quite a bit lately. So we are getting a lot more exposure because we're a very private type of group. We don't advertise, big long-winded stuff that all the other snake oil salesman type of services do, that we're going to make you rich and all that garbage. We are a very private service, and I would say a good 90% plus of our membership, which runs anywhere between 100 to 200 members at any given time, we'd certainly like to enhance that, is through referrals, and that's what we are. But anyway, I'm glad that the word is getting out there, because the stuff that we do here is pretty tremendous. It's more for somewhat serious traders than people just looking to just roll the dice. Okay, on that note, welcome. So I'm going to leave the second section of this webinar for Q&A. Like to answer as much as possible within a reasonable time. We don't want to sit here for hours, and certainly like you have all of you involved. We have 2 members and a free trial subscriber here today, and certainly I'm positive that you will join us after your free trial or even during your free trial. Mr. Patel, Himanshu. Okay, now let me dive in. So what Clueless Day Trading is, in a nutshell, is we trade exactly as our motto says, tactical, not emotional. It's not just a marketing slogan. It is a discipline that I follow very rigorously. So what we try to do in simple English is that we try to remove as much as possible, remove the emotional element of trading financial markets. And what that simply means is that these type of, and this is just a naked chart of the S&P 500, E-mini futures. Of course, that's not what you're paying for when you join us. We have, I'm just showing you the naked version of what people see without any structures on it. And this is what we trade, okay? Is what we try to do is we remove the emotional element as much as possible from our trading context. All my trading alerts, charts, commentary, analysis, short video clips, sometimes Periscope broadcasts, are all presented on the real-time Twitter feed, which is the private stream that everyone gets all the content in. The chat room, we have 3 conduits, 3 pipelines. The first and foremost, where all the content is delivered, is obviously the private Twitter feed. Everything is there. All the alerts are there. Charts are there. Specific, quick, important, market moving, relevant, breaking news, which will affect your trades, are there. What we are buying, things which are moving, everything is there. So it's and for people who want instant SMS text, all they need to do is go to their settings, profile and settings, click that, go into your settings and privacy, and add your cell phone number. Then you get automatic text. Most people know that, some people don't. So anytime that you're out there and not in front of a computer or PC, you on your portable device, iPhones, whatever, you get direct SMS text alerts directly at the Twitter thing. So this is the main platform. Um, the second is the chat room. You guys are obviously in the chat room right now, and the chat room basically, in a quick nutshell, looks like this. So this is the live chat room. Obviously, the back end is I'm on the back end, so that's why you're seeing some of the stuff there. But this is basically the chat room. You have multiple. Sorry, private information there, so I need to take that out. You have multiple chat rooms, but primarily the chat room that is the most let me take this out. Oops. There. Okay. The chat room that is most active. Sometimes it's quite busy. Sometimes it's not. Because most of our members and traders, as you'll know, Shadar knows that, and uh, MCAT. That's what I'm going to call you, Nee. MMCT. I don't know what that stands for. But like Triple M knows, I'm going to call you Triple M. All right. That is sometimes it's not that busy because we are not chat hogs. Okay. We're not out there, screaming and shouting in the chat room. It's a great place to meet in the sense that I'm always monitoring it, and as you know, as a founder and as a founder of Clueless A Trading and myself, that's my living. I'm a professional trader, independent trader. Um, I am always engaged with my members. So anytime there's any questions and stuff, I try to respond to it as quickly as possible, and that is a huge benefit to a lot of people. And the fact that and people have some direct questions. Some people might want a little explanation. Then you have some older members, inject a little bit of humor into the game. They post sometimes they post their own trades, and some of them are fantastic. Some of them I liked in the sense that I'll put out there on my Twitter feed as a member suggestion, and they worked out great. So the website chat room is an integral part of communicating directly with my members. Fantastic place to come by if you have time. Um, okay, the third. Um, Very, very critical is the YouTube channel. It is where you get to understand um, and see what I'm thinking, what the forecast of what I'm doing, and I do try to do about anywhere from 2 to 3, minimum 2 video blogs a week. These are extremely precise. Not my words. You guys can go see. I mean, certainly have some of you have already visited that, and Himanshu will check it out, and you will see that this is a fantastic. And you can basically click and say, okay, this guy's talking this stuff, but let me see what happened 2 weeks ago when the market crashed, or there was a flash crash in the middle of the day, 600 points. We get that a lot, right? So you can just go back there. You can go down there and do it by date and check it out. And you'll know exactly what I'm talking about, what I said, and you'll see more likely than not, I was pretty much correct. Nobody is perfect in this business. Nobody is perfect in life, but the higher probability of we have a very high probability of hitting our targets, both on the markets and on individual stocks. The other platforms that are there for purposes which are very important, to highlight certain trades, not in real time, but after the market. Those are primarily for promotional purposes, but still, you can basically, just for a quick minute, quickly check it. Is our Instagram account. Our Instagram account is serious stuff. Okay, And it is currently being run by my marketing director, also a trader, and it has really taken a life of its own. So every one of you, and I keep on telling you, it's important to you because at the end of the day, in a quick minute, you can review a bunch of the highlighted trades and see why you might have missed some of the biggest things that we did. So make sure that you follow the Instagram account, and more importantly, get a lot of your people to do the same. All right. Um, so that's basically, that's in a nutshell are the resources that we have. Um, and bottom line is, we're not in the business of just putting out garbage content out there just to keep people happy. Every content is very specific, and we're not here to cover the whole universe of every single stock that's moving. That's not what I do. We trade quite a few different stocks in different sectors, and we trade the indices, the SPX, the SPYs, IWM, RUT, QQQs. Um, I am not directly a futures trader, but we have a lot of people in our, not some people in our group who are futures traders, and they love my charts because they are just, and these are all, these are obviously the E-mini charts. This is a 1 hour version. And they trade these levels consistently and make money. So, so that's sort of the broader picture. Now, when it comes down to the technical part of it, as I started with this on this webinar by telling you guys, is we try to completely, as much as possible, remove the human element. You will never see, you will never hear me post, well, I think it's going to do this or that, or I think it's my opinion, because my opinion, your opinion does not matter. The opinion of a Wall Street analyst who's dead wrong on Apple and Tesla obviously doesn't matter. We have been right, just to highlight two of the biggest examples in the stock market just in the past week. Okay, we did it. We've done it before, where we were long those stocks, and we had a small straddle on Tesla, obviously, but the bias was a 2-to-1 long bias on, and it was just huge. So reading the charts and these roadmaps is of critical importance. Obviously, some people are faster. They have a little bit more of a technical eye. They understand a little bit more about chart patterns and stuff like that. Oh, which reminds me, on the YouTube channel, there's under playlists, which is very very important. And Sudar and Triple M know that, mentioned that. We have different categories. This new member introductory video category. There are 36 videos in there. You obviously don't want to sit there and listen to 36 videos, go nuts. There are about 6 or 7 in there. Basic chart pattern analysis, technical trading technical charts. All my videos, by the way. There is one which I put out there, which I found on Pinterest, candlestick patterns. Basic understanding of what a candlestick movement is all about. Green candles, red candle, different types of inside day, things like that. You have to listen to it. If you are technically biased, fine, it'll enhance what you're doing. And if you're not technically biased, it is mandatory. And that's the first step you need to do. You need to go into the YouTube channel, go to the new member introductory videos, and listen to some of those videos. Look for the titles which are, which you find of interest. Listen to the recent ones. So bottom line is that you need to certainly do that. Okay, where we are. Very important. So reading the charts and every single movement and stuff is almost impossible for a human. I construct the charts based on my experience as a successful trader. I use basic technical analysis mixed in with my style. which is very important, and that's where the money's made. Everyone can do technical analysis. Anyone can draw a trend line and blah blah blah, moving averages and things like that. But what I do, and show a highlighted example, this Tesla chart, for example, what I do on a consistent basis with almost every alert, I'm putting out a chart, which is huge. It's like you having a GPS roadmap right in front of you before you take a trade. So extremely, and I believe that's one of the most unique features that we have at Clueless Day Trading, where you're not just delivered a trade alert, buy this and see you later. You have a GPS roadmap in front of you. It is not possible to guide people every 5 minutes on things. Obviously, I try to be as real time as possible with my on my Twitter feed during trading hours. But these charts are pretty much showing you, and I do a lot of arrows and things like that. It takes a lot of my time, as I've said before, but it helps a lot of people. Show you like what can happen, where things can go, where there's going to be, where there's going to be some sell programs waiting, where it can fall to. So the key is, bear with me 1 second. Hello. Sorry. So the key is that you have to keep an eye on the charts, and if you have time, and you can monitor things, then obviously you need to monitor. Now a lot of our members don't have that kind of time because they're in meetings and things like that. So they will buy into these things. Of course, you have to know what kind of stock you're trading. If you're trading a Tesla, you better be watching things pretty reasonably carefully, or you might want to put some sell orders out there, because these things move fast, and things which move fast in these extremely powerful algorithmic high frequency trading markets, as I keep on explaining to everybody, then you need to be fast. So you need to have some protective orders so that things don't go crazy. It doesn't mean that you have to sell out every time there is a 50-point dip on the Dow Jones and all the chart structures of this are intact. So I keep people as probably one of the most timeliest on a real-time basis notification and subscription services at Clueless Day Trading, so they're not caught in the dark, like, oh my God, what happened here? It's the end of the world. So the chart reading is extremely important, and one session can never explain to everybody what goes on. There's a lot of messaging that goes out. And some people who are, I have members who've been with me since we started in 2014, who are pretty new, and compared to the services out there that have been around for years and years and years, is that who understand my charts to a basic degree, and they just buy my alerts. They have no desire to really understand the mechanics of what all these things mean, and it works for them. So that's the easy way to do it, I guess. But what causes the major difficulty is because of the nature of the markets, which are extremely, extremely volatile. Nothing is in a straight line, right? There's your apple. And what we did. So extremely, because of the volatility, daily volatility in the market, that's when things go wrong. Because if you don't even have a basic understanding of the charts and what I'm showing, then you won't know that a minor dip means nothing. This is obviously, a minor dip means nothing as long as the ranges are fine and the different internals, and this is the simplest one that we use very effectively, which is the stochastics. That's the second derivative of the relative strength index. Works beautifully, like magic, that it's not the end of the world. So that's where people get caught, when the market gets choppy, which is simply the simpler way of saying when there is structured volatility such as this. Okay? These flash crashes, and now it's pretty dramatic. It just happens just like that. You know that. So I pinpoint those levels. We tend to short intraday. I don't like, given this type of market, I don't like keeping shorts overnight. We know that. Triple M knows that. Siddhar knows that for the short time that they've been here, and now members. It'll burn you. Didn't shorts get burned when we called it? Because this was a major level, the 2789, 2790 level. It's just, see, as a visual trader with this type of technical expertise, you know exactly. I can make up stories and say, oh yeah, with the body, it's there, it's showing, and these charts are not drawn. Himanshu, um, after the fact. These are before the fact. This is how we landed up, as I said exactly, that these are bull flags. And I started to see, of course, this was a bull flag consolidation channel. So the market till 11 o'clock was still deciding. The big money knew what they were doing. All right. And I've been saying that we're going to go to 28.50. And after this happened, the chances of that, this monster rally that occurred on Thursday, right? Yeah. Right off the bat, well, futures were crashing on the China tariff news. That China is retaliating with 60 billion tariffs. Well, what's new about that? Of course they're going to do that. But it's not set in stone. It's a proposed thing. There's a lot of stuff that's happening under the table. If you listen to my my weekend video casts, which are there, you'll know. I explain a lot of these things as clearly as possible. The global macro game theory part that's being played, that affects our markets and your P&L and my P&L on trading. So anyway, so this was the second. Today's the fourth, right? Yeah, Thursday. Right off the bat. Look at the time at the bottom, 6 in the morning. Futures started recovering. 9 o'clock. See you later. They didn't give, like, anybody who's remotely short. It's just burnt. Need to get out. And it just goes up in a straight. This is a straight 90-degree angle. Now, people say, wow, look at that. This is crazy. It's not crazy. It's just pure mathematical patterns. That's what we specialize in. Was this crazy? This was a direct straight line, couple of hours, bang, down. This is exact pattern symmetry, which I keep on talking about. Go through my Twitter feed this weekend, Himanshu, and you'll see. I even put comments, quick technical comments, not like, oh, la di da da da, this might happen. Specific comments. This is a massive dragon bullish pattern. There. With monster volatility along the way. But that's exactly what it is. And I always like to say a child can see these charts a lot clearer than an adult. It's a fact. Believe me. If you have young kids, my son's 19 now. He's in college. But young kid can look at this and believe me, they'll be able to decipher this and join the dots and tell you where my charts are going. So there it is. So these things happen very, very fast. And I'm talking hours and days. You keep on scrolling back. These are past stuff. Obviously, if I keep on scrolling back, it gets messier. But if you look at the bigger picture of what this is, this was and these are all tradable candles. And we trade them very actively. We have day traders, we have swing traders, we have people who buy things and just sit on it. People who love my long-term calls, like Chipotle from 280. Where is it now? Almost 500. Regeneron, just in the past 2 months, up another 200 points. Ulta Beauty, when we were buying it all the way lower. Those are long-term calls. Okay? And recommendations or suggestions, whatever. And so, everyone has their own style. Some people are active during the day. I am active during the day, but I'm not a crazy day trader. I'm not trading every 5 minutes, but if I'm buying one of these candles and I get this nice short move and my puts, which have happened quite a bit, go from 2 to 6, I'm not going to sit there and say, hey, I'm going to leave that 3-bagger or 200% in profits, to the table. I follow my charts. Right when everybody thinks it's over, right there, it goes ballistic. That's why these charts are precious. Now, if you look at this pattern here from a broader perspective, going back to July, this is a bearish head and shoulder. Lots of money to be made in between that. No question about it. But if you zoom out, that's the head. There's your left shoulder. There's your right shoulder. Well, guess what happened on Thursday and Friday? That head and shoulder was negated, blasted. So technically speaking, see you later. The market is not going to, that stupid comment, it's going to the moon. No, it's not going to the moon. It simply wants to get towards 2850. We see what the reaction of the market is there. And remember, these charts on the E-minis control most of your forward trades. Because if the futures are falling 10, 12, 20 points, I don't care how good a chart setup is on the other side. Those stocks are going to be down on the front end. That's going to affect your options. Standard procedure. That's why it's so important when I'm showing these things to quickly understand that, okay, things are all right. I can't be hand-holding people saying, okay, kids, it's all fine. I do that sometimes, as a joke, on in the chat room, like our terms that we use, grab those diapers. So, but the more you understand the charts, the more comfortable you're going to be. Scared? Hey, I'm scared a lot of the times too, but I use that as positive energy. People say, oh, you can be really scared. I'm really brave. No, no one's really brave when they're dealing with real money. And the bigger amount of money that you're trading in the markets, you all know that, the more nervous you're going to be. If I have a large position, which, for example, on DE, on which was one of our biggest trades this week, 600%, where the calls went from 45 cents to $4, almost $4, more than 600%. But initially, we kept on buying the setup lower. And the next morning, the stock woke up and the all day it went up $7. I didn't exactly know that, but my charts were telling me it's going to be fine. And I had time on my hand. This was earlier on in the week. And it was huge. 600, 700%. But you had to do the setup before. You could chase it during the day too. I did tell people to buy the forward calls. We were the 143s. The stock started running like a monster. You could have bought the 144 calls, and these are all cheap. They're less than $1, $1.50. They go $3, $4, $5. But anyway, so the bottom line is that now, as you guys can clearly see, there's your. Oh, let me get rid of this. Here's your double top. I call that one. Didn't expect a crash like that right away, but hey, we got it, fine. Left shoulder, right shoulder. Here's the neckline. This is standard procedure, and that's why it's very important that you understand the basic format of all these different patterns, and that is I explained that in very simple terms on my YouTube channel on the new member category list. It's called Chart Pattern Analysis, I believe, and there are tons of fantastic videos on YouTube. People with like million views. We should have that, explaining basic chart patterns and stuff like that. So you have to understand it. So this was your neckline. So if it broke here, I have other charts to show where we could fall, where we could go, but we didn't. This is one of the strongest supports for now. I've explained this on my weekend broadcast too. So now these shoulders have been smashed. And that's why we are getting this acceleration channel, which is going to culminate on a short-term top here. Now, these are a lot of money. This is where the $2 SPX call goes to 15. All right? These are not small numbers you're dealing with. Intraday, you can make 50, 60% on these moves. Breakouts, all shown. So you need to always set up as much as you can prior to the breakout. Because by the time it's broken out and everybody's happy out there in Lala world, then 1 second. Then it's when the rest of the retail emotional crowd get all excited, we're sellers at that point. As I said in those fantastic marketing videos which were presented yesterday, published all over the platforms by my marketing director, and he took clips of what I said and what happened. You guys got to listen to it. It's fantastic. It's just a quick sort of commercial ad promotion, but it's fantastic. That by the time these things happen, I lost my chain of thought. What I was going to say, it's too late. This is what I was going to say. We always buy a little early, which is where the painful time comes in, right? And but we sell sometimes a little bit early. That's fine, but we catch the big meat in the middle. Because by the time it's getting here, the machines are going to not exactly maybe kiss the 2850 level on the E-minis. Maybe they'll turn from here. And the bag holders buying here, thinking, oh, it's absolutely great, this is going to break out, will be caught as it creates a big consolidation channel. It will. Every time you get a big rally, you get a flag. That's why it's called a bull flag on an uptrending market, because the markets are uptrending. There's no question about it. On multiple formats. Go through my Twitter feed and I've said that. So that's a bull flag. So anyway, bottom line is that's what we do. And we do it very effectively. And we like to help people as much as possible. One of the things that I'll say before I open it up for Q&A is it's just this making money in the markets using tactical, to say trading tactical charts is a fantastic feeling. But you need to be mentally very disciplined. You can't be fidgeting around. We call them monkey on a hot tin roof. You cannot be a monkey on a hot tin roof. Am I going to be wrong sometimes? Absolutely. That's part and parcel of the business. Am I going to be very wrong sometimes on multiple fronts and a completely wrong forecast and things like that? No. Is it your responsibility to manage your trades? Absolutely. I'm not running your book. I don't want to run your book. I don't know what kind of money you're trading with. That's not my business. But we are probably one of the most involved services in explaining the reasoning behind why we do things than just throwing out something out there. We have great members who like to help each other. We have fantastic training sessions at minimal prices, like nothing, just to cover the cost of running it. All right, because my income comes from trading my own book, not from the subscription service. This is added stuff, but that's not what we do. We're not subscription junkies. Like, oh, this is my service, that's all I do. No, I trade my own book. That's what I feed my family with and pay my bills. And this service is a supplemental resource for a great number of people. Read the testimonials, very important. All of you new members, read the testimonials on the website on the top. Click it. Read what other people have said. I don't pay people to write this stuff. That's just own feedback. So that's Clueless Day Trading, guys. So I'm going to leave this open for specific questions. I know Triple M had a question. Go ahead. Triple M, you had a question? You were asking me before?
Yes, yeah. I'm about to type, but I can talk now. On your alert,
Yes.
I have a question when you say that go back to the Tesla straddle. You say
Tesla. Okay, go ahead.
You say that yeah. So you say sometime like 2 to 1 ratio.
Yes.
Bias.
Yes.
What does that mean?
Yes.
That's two call in Tesla and 1 put in Tesla.
Let me explain to you. Basically, what it means, 2 to 1, you can look at it in that way, but I mean mostly from a dollar standpoint. So if I'm saying 3 to 1 bias, which I sometimes say, or 2 to 1 bias, okay, it simply means, okay, 2 to 1. Oops, sorry. 2 to 1 bias. It simply means that some people will interpret it as buying 2 calls on one side and then one on the short side, on the straddle side, on the call and the puts. Or you can also look at it from a dollar standpoint. So it's just a general figure. So that simply means that you put $200 on the long side, and that you have $200 on the long side, and you have 100. No, that's 50%. That's not right. $50 on the short side. So in other words, one can interpret it like that too. Okay, but generally speaking, if you remember one thing, that if you are doing a straddle, you want to, and I say 2-to-1 bias, you want to be twice as long overall with that, and less on the short side. So that's really what I mean. It's either double the money on the long side, or you can look at it that you have two calls on the long side, one on the short side. Now here's the only thing here. If the put that you're buying on the short side is very expensive, then you want to make sure that that doesn't work. So you should look at it more from a dollar standpoint than a specific contract standpoint. Okay.
Oh, okay,
Yeah,
okay.
because let's say, for example, you paid 2-to-1 bias. So 2-to-1 bias. So let's say, for example, these calls were cheap. So you paid, let's say, $400. Well, Tesla calls were more expensive. Let's say you paid. I'll just still use it. You paid $400 for those calls. Okay, but this one put, because I like to buy in most cases in the money puts, right? Or in the case of those ones, $30 lower, because the implied volatility is big. So you need we know it's going to move large. So we'll buy it $20 or $30 less, but not like $100 less like some people do. In which case those work too when they go, when something crashes. So if the puts are expensive and they are, let's say, one put is $3 and it's $300, that's not a 2-to-1 bias, even though these were two calls and one put. But if that one put is $300 and the calls you paid roughly $400, that's no longer a 2-to-1 bias. You understand what I'm saying? So generally speaking, you should be looking at it from a dollar standpoint. That you have double the money on the long side versus the what do you call it, on the short side. So look at it from a dollar standpoint. Now the other trick that I'm going to just mention to you guys, when we do these straddles, always buy, which I always like to show, always buy time on the ones which are on the long side, especially if the earnings are coming out on a Thursday. Anytime after Wednesday, buy the following week on the call, so you have time to readjust dollar cost average as we do. So the calls, you want to buy them at least 1 week out, so you have enough time left to adjust what you need to do. And the puts, which is basically the straddle that we do, you want to buy it for that week. So this is 1 week out, and the puts on the straddle, you'll notice, will be for the same week, same expiry. So so basically, why? Because when things crash and it's human decisions and the algos move and people panic, it happens immediately. It doesn't wait a week to crash, right? If bad news comes out on a particular, especially fast-moving big name company, it's not like, okay, I'm going to have a slow crash. No, it's immediate. So you want that for the same week, and if it does come down, how many times have we seen reversal bounces? We have made huge money on reversal bounces, right? Multiple stocks. So the bottom line is you have a week left to cost average and do that. So always buy time if you are doing a straddle with the calls going out for the following week, and on the puts you want to do it immediately, because the bad news is going to be absorbed immediately and you're going to make the big money on that particular trade on the short side. So that answers your question.
Yes, but also that, like you say, the call for Tesla is 400, and then the put is 300. That's not the strategy. But what would you do? The put is so expensive, like 300. Well,
Okay,
how do we adjust to that?
Okay, there's no one answer to that. But I wouldn't be doing, that's not a 2-to-1 bias. So what you can do, and there's no easy answer to that, okay? Because they will always stuff premiums before huge earnings. In other words, it's called premium inflation, okay? So they will certainly do that because they know everybody wants to be in those. So what the machines will do, they will inflate the value of those options. Options on Amazon were so expensive before earnings. It's just the way it is. So what you would do is if you want to do this type of straddle, you will basically go, you'll have to buy out of the money calls, out of the money puts. That's the way you reduce your cost basis. I mean, amount of money that you're putting into the trade. Sometimes it's so expensive, like bookings, very expensive price line, and we trade this. Just don't do it because it's not affordable. Booking calls, even $30 out of the money right before earnings will be $40. That means one call will be $4,000. So the point is that there's have I bought one call sometime and that 4,000 goes to 8,000 because because the earnings just blew up? I mean, were fantastic. Absolutely, that happens. But sometimes you have to think as a trader: is it worth it? Sometimes sometimes say no. So that all depends on the individual trader on what to do on that front. Sometimes you just have to sit out a trade. You can't do the earnings because they're too expensive on the option side. Another one which we trade very successfully, especially during earnings, is Intuitive Surgical, ISRG. We nailed it. But you pay like $22 a call, so that's $2,000 a pop. Yeah, you're gonna get a double on it. We did. But is it worth to do it? What if it didn't work? That 22 will be down to 6. So there's no easy answer to that. So sometimes you just cannot do it. Okay, next question. Siddhar, you have any quick question?
Me? Can I have another question?
Yes, I do.
Yeah, 1 second, and I'll come back to you, Nee. Yeah, go ahead.
Yeah, thanks. So I have a question on when to average it, like you on the SQ, right? Yesterday, you keep asking to add more when it is getting down.
Yes.
So what is
yes.
the strategy on averaging down, and what is the strategy on the stop loss, when to just sell it on the stop loss?
Yeah. Thank you for asking that. It's a fantastic question because it was a very strategic move on my part. We had a monster day on Square the day before, if you remember, right? So, and then I told people, because we had the 66 calls, and Himanshu was one of our best trades too, a Square. The stock was down $3 after earnings. We started buying it heavy. The calls went from, they just exploded. Where did they go from? They went from like $1, they went to like $6. It was beautiful. Those were the 66 calls, mind you. And I told people they should do it on their own too. Just take the profits and roll over into the 70 and the 72s. Now the 70 and the 72s, because that's how you keep most of your money, and then you buy the cheap ones going out. And the 72s went through a and the forward calls, the 70 and the 72s, obviously had a sharp pullback because the stock was down 5%, but a significant amount of technology stocks were down on Friday. So here is the strategy and what I was looking at when I was saying buy it, not just buy it just for the heck of it. So let me see. I should have a shorter term picture of this. Oh. One second. Okay, bear with me 1 second. I just had to respond to a text. I'm going to show you the bigger picture of what I was looking at, and then we're going to look at the shorter one, the 1 hour that I was following very strictly. I didn't like the pullback, but it technically was okay for me because I know exactly why it happened. But there's nothing, and those were the cheap calls, so we're fine with that. So here's your longer term picture. When you look at the longer term picture and you look at the simple underlying internal, this was one of the biggest bullish, and this is a daily. It bounced off the 50-day moving average with a monster candle. You saw that. Now that's what we enjoyed in a big way on where the stock bounced from a pre-market low of around 64 or lower, all the way up straight towards 70, almost $73, which was probably one of the biggest bullish engulfing candles I've seen in a long time. Now, generally speaking, you will always get a consolidation flag right after you get a move like that, and you want to buy into that consolidation flag. So here's your let me change the color. Here's your massive bullish engulfing candle. This is not a joke. This is where shorts got absolutely creamed, and new buyers came in. It's an extremely bullish maneuver. Generally speaking, you will get a pullback, which we call a consolidation channel. That's known as a bull flag before the stock attempts another breakout. All right. So this particular candle, which was a 50% retracement, it is still, from the bullish standpoint, and I'm watching this very carefully, from the bullish standpoint, on the daily charts, it did nothing. No technical damage whatsoever on the daily, the STOs. When these lines cross, it triggers a massive buy signal. All right? And these lines are just about to cross. You can see that, I don't make this thing up, and once it crosses, it goes into a it's not like every day the stock is going to be up, but generally it swings, it's moving on. And for the next week or 2 weeks, you will see the stock make a move higher. And this is exactly the same pattern. You can see that, right, Sudhar? This is just about to go. So that's number one. Number two, this bull flag, is still intact. I'll show you the shorter term version in a minute. This pullback on the stock was a little bit more than what a retracement should be the following day. I'll admit that. But we have to deal with what's in front of us. So generally speaking, we would have liked to see the stock closed where? The stock closed it closed right at the, let me get this line out. It closed right at the, close to the rising blue line, which is the 20-day moving average. I use that very closely, you know that. The 20-day moving average. The lines, the overall directional trend lines, all higher. What pressured the move was, number one, there was a huge block sell coming out of Europe or somewhere that needed to get cleaned out. That's why Amazon was down, Google was down, pretty much all the big name other than Apple and Tesla, pretty much all the big names were down. Lots of fantastic looking tech chart setups, they were for the day technically down. So it wasn't just Square. There was nothing negative on Square. That's another part of my reasoning. There were huge upgrades. The stock is still on a nice swing upturn. So there was nothing really specific about the company, in which case I'd be out. There was nothing like that. So number one, all these are fine. What was I using so overall trend on a swing basis? Totally fine with it. And we have been very successful with Square, by the way, all the way from the 40s, all the way from 40s when things were selling off, things like that. We have traded it numerous times. And as you can see here, let me try to show it as much as possible. On a weekly, that's another thing that I was looking at. On a weekly, this was before even the sell-off on Friday. This is still a very powerful hammer reversal. Okay, very powerful hammer reversal holding the 20-week moving average right there. So if this becomes a bearish engulfing candle like that, and before it happens, I'm going to basically tell everybody, I'm sold, like we're out. We take our losses on our lottos. But nothing like that is happening. This is still a very powerful bullish very powerful hammer reversal. You understand hammer reversals by now, right? Because I've shown quite a few of them.
Right.
Yes, exactly.
Yeah.
And you can see it technically closed right at that level. So that's on the longer term picture. Shorter term picture, I was using two charts. I was using the 1 hour, this one. You'll notice that the selling, here was the stock on Friday at 4 o'clock when it closed Thursday. The sellers started coming in here, couldn't really, that's standard stuff. And then there was a big block sell right here at there was one at 9, but the biggest block sell, you can see here, volume. This is reading the volume right there at 10 o'clock, and that was 3 million shares. Now, quick a reading, and this is all stuff that I show on the training thing so people can understand. There's many ways of looking at it. Look at what happened the day before. If you add these bars, which you can take a calculator and add these bars, hour by hour, you will see that the buyers are still fully in control because the volume exceeds these 3 candles, red candles, and these 2 substantially. If you add this to even 2 of the big buy programs that were in effect, and the one that came in late in the day was at 3 p.m. That was a 1.8 million block buy. Of course, not in one block, but in stages. But at least during the hour, almost 2 million shares were bought. And then at 4 p.m., approximately 15,000 shares were bought, or 25, yeah, about 25,000. So bottom line is, this is what pressured the stock. There was some sort of hedge fund which was short in a big way. And these are things that actually happen in the market, from Wall Street days, I've seen it. They got completely blown out of the water on what happened the day before. And we just minted money on that, right? So they basically shorted the stock to recover some of their money. And that was part of the reason why the stock was down. And plus the general pressure on the tech side. You following me so far, Sridhar?
Yeah.
Yeah, these are things
so my question is
let me finish. I haven't finished yet. Let me finish my thought. Okay, I'll give you the broader picture. What made me keep on buying the thing? First of all, the trend lines. Okay, the 50-34 trend lines still trending higher. The stochastics starting to got oversold and then started to turn. As long as these things are cooperating, I will basically lower my cost on those lottos, and that's why I was buying those lottos. It didn't feel that great, like it down from down about at like 40 cents around those levels, 36 cents from like what, like $1 and change, correct? But the fact is, yeah, exactly, a little bit more. So, but at the same time, this is just what I've done many times, as long as these technicals are still fine. If I saw this line break and this line and the internals didn't cross over, I would not be putting out that recommendation. So go ahead with your question. One last thing here.
Yeah. So this trend,
this is also known as and things that I was looking at. Okay, this is also as I put out there, the inverse head and shoulder, which is a very powerful pattern in the way we trade, is very much intact. Here's your triple bottom. Here's your left shoulder, right shoulder, still intact, and the stock started to base itself exactly there. So now go ahead with your question. Sorry.
Yeah. So you said like how to average, like when to average here. So like when, like what is the time, like when, like in which situation we're gonna take the losses?
Like I said,
like, are you gonna say like the situation you're gonna
take
the bottom, the red line here?
Oh, the situation where you're going to take the losses is here. And remember, these are fast-moving markets, so I will notify as quickly as possible. Generally speaking, this is pure technical stuff. Okay, if the stock breaks 67, they're going to smash it down to 63. So generally speaking, we have a buffer here. Technically speaking, you want to put a major stop at that 66, basically 66 and a half, 67. But we have to see the reaction very quickly, whether or not it's a straight line breakdown or whether they're going to turn the stock from here. So that should be your support level, the 66 and a half, 67 level, because that's known as the neckline. Okay, that's your neckline. That's when the neckline.
So how do we read that from your chart in the feeds? Like, okay, here is our stop line in
Okay,
your chart.
you first of all,
I'm not specific for, like, I'm not specifically asking for SQ in general.
No. What I'm saying is, this is the way you read the chart. First of all, most importantly, you do have a charting platform, right? I mean, every trader has to. You can look at charts on your side too, correct?
I actually, I don't look at. I mean, I don't have my own.
Okay, well, that's a very dangerous thing. It's like you're driving a car without a steering wheel. Okay, I'm serious. Okay, you need to have a charting platform on your side, because I forgot, you have Robinhood, right?
Yes.
Okay, Robinhood. I mean, Robinhood is a joke. It's a fantastic, cheap way to trade, but they don't have charting and all that stuff. So this is the best. First of all, you need to open an account with Thinkorswim, in my opinion. So you can basically set up the charts the way I do, and it'll make your life a lot easier, and you'll make a lot more money immediately. Okay, you can download their platform. I told you on the phone. I think that you can do that for free. So you need to do that. The best way you can.
Yeah, I access the Ameritrade. Yeah.
TD Ameritrade, Thinkorswim. The best way you do it is using investing.com.
Yeah.
This is free. So let me show you the square chart on this. Okay, so this is free. Just put your email and start doing it like right away, because without charts it doesn't matter, because if you can't see what I'm seeing, then the reaction time will be quick when I'm putting a tweet out there, but you also have to make your decision. So yeah, you definitely have to use investing.com for now before you set up your Thinkorswim stuff. So here is the chart on and this is a fantastic platform. This is a daily chart. Okay, this is a daily chart. Well, let me make sure, and this will answer your question. Is it the daily or the hourly? No, this is the hourly. Sorry. So a couple of things going on here on the hourly chart. First of all, the volume stuff I explained to you on Thinkorswim. What was going on? So this is the chart the way I've drawn it. No, 1 second. Where's the gap here? Hold on. Why does it show? Because there was a gap fill here that I had shown, but what time frame was it? Let me see. Square. Perfect. I don't know why I was doing that. So there's a couple of things going on here, Sridhar, okay? And that's why start like reviewing my other videos and stuff to understand the charts and things like that. Here's a gap. That gap was at 9:30 on that reversal. So we were long the stock here the day before. So we were long the stock here around the 66 level. That's why I bought in the money calls. Stock went down after hours to 63 and change. Stock even opened down there. This is like a gift. Opened down there. On, let me change the color. In the morning, I said buy. I'm seeing the reversal. You don't get these too often. All right, and the thing just went ballistic, up 400% plus during the day. Then the stock basically, this was 9:30 the following morning, 9:45 on the 2nd, and the stock basically started to climb. And we created a bull flag, started to climb, and this is where it closed at 4 p.m. on Thursday. You see what I'm talking about, right? Right there. Right there. Okay? So then this opened up on Wednesday with text down, and then a square was fine the first part, and then this big seller came in. I explained to you on Thinkorswim that that big seller was very active, or whatever the hedge fund was, the first part of the day. So then I see that there was a gap here. That's why this green line's been drawn. It's a gap. I expected the stock to hold. To between you and me, I expected the stock to, here's your channels. These are channels, right? So I expected the stock to bounce from around $70.72. I expected it. It held there. It tried to hold there, and then it dropped. Then the gap fill, it stayed on that gap fill. And this is how things work, all right? I don't make these things up. It stayed through the gap fill till 115. So I was buying here at these levels. And then it slipped below a little bit. And I didn't like it, but I don't control the markets. So I decided, part of it is my, my gut feeling, based on everything that I was looking at, based on the very deep oversold conditions, I decided that I'm going to basically add to it. And I also see something here which is very similar to what it did, where things get very oversold, or bought, and then it's a similar type of pattern. So this is what I expect Squared to happen. I expect Squared to hold this level here, give or take a few cents, 30, 40 cents, and then the stock basically get back into this channel and head to a 70, 71, 72. I expect this to happen by, depending on market conditions, by the first part of this week. If I do see, and this was your question, if I do see any break below these type of zones, obviously at that point, I will take the loss. And in fact, I will short some and buy some puts, because that means something else is going on that me and you don't know, because at that point, the stock could very well retest the 64 lows. I do not expect that to happen, given the deep oversold conditions on that particular, on the particular company. And given that they were lottos, they were affordable. So that's one of the reasons too why I lowered my cost basis down. I do this quite often, depending on what I see technically, and they tend to pay some very big bills. Just because the market is very volatile, and for no reason, you get these type of pullbacks. Triple M, you had another question. Please, make it quick because I need to wrap up.
It's about like when you have alert on ER, you say that basket strategy.
I'm sorry, on ER as in earnings. Yeah, ER trade is earnings trades. Yeah, what strategy?
Basket strategy?
Oh yeah, very good question. The basket strategy is actually very effective. So let's say, for example, I give 5 ERs, okay? You look at it and you're like, all right, what I do is I'll buy a very small amount of each of them. And so the basket strategy works because what happens in this type of market, one of them will go through the moon, one of them will fall, one of them might not do anything, or two of them will go through the moon. So a basket strategy of buying even one call of each of them works great, because this way you basically tend not to lose much and tend to make a lot if the majority of that basket, or one or two of those baskets, go through the roof. So basket strategy simply means a diversified strategy of buying those 5 or 6 earnings calls, just giving you an average, and just buying maybe one call of each or so, and buying it in a basket instead of trying to pick and choose and say, okay, that's the one that's going to go higher. Because yes, sometimes I have a feeling that one of them, that the one which I like the most, but I tend to basically just spread the dollars in across in that basket of the different earnings plays that we're doing, instead of just trying to pick and choose that one, because if that one doesn't work, then I'm out of money. So that's a basket strategy.
And also, when you say that in the money, how far in the money should it go for the ER strategy?
Well, the thing is, when I say in the money, so let's say, for example, a stock is at 80, so I will buy the 80 calls. Okay, I'm not going to buy like the 75, and pay up for it. Generally speaking, I will buy at the money, And so this is in the money calls. Or if it's a big mover, I will buy, you know, there are different ways to look at it. If it's a $200 stock, I will buy that maybe the 210. You know, so the thing is, the more you buy in the money, it's going to cost you more, right?
Right.
Exactly. So the thing is that sometimes I'll say, you know what, I do want to play this, but I want some level of safety. So if you buy in the money, so even if the stock goes down a bit, then you don't lose much. But if it's way out of the money, let's say it's a 200 thing, and you buy a 230 call, if the stock doesn't zoom higher, then they will basically immediately drop it 50-60% right at the open. You understand? So
Yes.
that's just it's like you have to figure it out what you know need to do. Sometimes in the money is so expensive, I'm just like, see you later, I don't want to do it, you know. And and then see the stock go up like, you know, 100 points. The booking is like that. Priceline.com, the new name is Booking. So
Mhm.
let me answer Himanshu's question. Himanshu, his question is, on free trial, do you have access to all areas? Yes. The most area is the real-time Twitter feed, the chat room, the video blogs are free anyway, the free ones. Yes. Okay, Himanshu is asking a bunch of questions. Okay, let me start with the question. Do all your alerts come over SMS, Twitter if you're signed up? Yes. If new to the site, where do you start? I think I explained all that. What you need to do, you need to start on the YouTube playlist, new member introductory videos. You need to immediately start reviewing what we have done, let's say over the last couple of days. All right, on the real-time Twitter feed. Also, what does a typical week look like? Morning call, alert, nightly summary. I don't do nightly summaries because my whole Twitter feed is like a running storyboard on what exactly is happened. I do nightly summaries. Like I said, I do roughly about 2, if not 3 video blogs during the week. So those are your nightly summaries, because I don't do, you know, that explains the whole thing. But I don't do your standard sit there, you know, and spend half my evening explaining every single thing. What does a typical week look like? It looks like blue skies, rainy skies. You know, that's a question I can't answer. There is no typical week that looks like anything, Himanshu. This is an extremely volatile market. If you go through my Twitter feed, you'll know exactly what a typical week looks like. We specialize in extreme volatility. And that's why, you know, and I'm always there. I never walk away from my members. You know, really crappy day, it's not like I'm all quiet and you don't hear from me. I'm there. This is a battlefield, and I will lead my troops as much as I can. So so that's one of the biggest things. I'm always involved. On free trial, do you have access to all areas? Yes. Himanshu, did that answer the questions? Good. All right, guys. This is the first of the 2 free webinars that I do. The second one we will do, maybe we'll do during the week. And like I said, if you guys want to really learn the skills, because this is just like any other profession. This is trading extreme volatility for maximum profits requires skill. You need to sign up for the advanced coaching sessions. You see the difference it makes, because that's where I spend a lot of time going through everything. See the difference it makes, and believe me, the $250, $60, or $70 it is for those 5 sessions is a joke compared to what I think you would be able to make on the returns, which should be at least 3 to 4 times higher. So keep that in mind. That's the best way to do it. All right, have a great weekend. We'll see you at around 8 or 8:30 p.m. Sunday for the weekly report, for the Sunday webinar, weekend report, which is an open webinar, or else I just might throw out a video. Sunday's going to be a busy day for me, but that's when we generally do it. All right, Himanshu, like to have you on board as a member, go through the stuff, and no fluff here, okay? Straightforward talk, and no sales pitches. Have a great afternoon, everyone.
Hey, thank you.
Anytime, sir.